Welcome back, everybody. This is Stephen Young with your June market report for Toronto. Now, the numbers are in surprisingly down. Well, not that surprisingly, but at the end of the day, we had an interest rate hike in June, and we had some summer lulls that happened. Kids are out of school, realtors go on vacation. So we're beginning the seasonal slowdown into the summer. It just happened a lot faster and a lot sooner than most people anticipated, and caught some sellers out and by surprise, but not me, because I was anticipating it. So we're talking about the June market report this month. And before we get started, I want to make sure that you like and subscribe our channel. It really helps me out to deliver more information to you month in, month out. Now, that being said, we want to get right into the numbers. So this is, let me see here, the June report. No, this is last month. So we're going to go into the June report. Here we go. So the numbers are in. So last month, we reported for June 1.182 million is the average selling price on the Toronto Real Estate Board, which is actually up from June of 2022. However, we're down from May, and that goes back to, this is the main numbers, of 1.196. So slightly down, not a huge decrease. But the main reason for that decrease was that the government raised interest rates last month. And at the end of the day, there's only so much buyers can take or they're willing to pay for. And a lot of people got caught out because April and May were very hot months. And what happened was, if your closing wasn't until June, July, or August, guess what happened? Your rates are going to go up. So people who over-purchased in May, especially because it was quite a hot month and there's a lot of competitive offers out there. If your closing was after the increase, most banks would not honor unless you locked it in, which is very rare. In fact, most banks actually don't do that. So your rate would have been higher than what you agreed to or what you anticipated. So it actually caught a lot of buyers out, which is an anticipation of a June slowdown or slower market, because a lot of would-be buyers or would-be homeowners who are on the fence are saying, whoa, pump the brakes here. We had 3 months of flat interest rates, and the news was reporting that specialists were reporting and the news was reporting likelihood was that going to maintain for the balance of the year. In fact, that was true. So it was a surprise that the Bank of Canada did raise, in fact, the rates to 4.75%. And it caught a lot of people out, myself included, because, real estate it's not like a stock where you buy it, you instantly own it the second you buy it. So you purchase something and then you're going to be closing it 30 days, 60 days, 90 days down the road. And what's really catching a lot of people out is the new construction market that people bought 4 years ago, and their properties now coming due and ready to close. And people who bought 4 years ago with interest rates at 1.5% are saying, whoa, I can't afford a tripling of the interest rate. So what's happening is there's tremendous amounts of deals out there in the marketplace, but there's no buyers. The buyers have just dried up, and this is anticipating of the numbers. So if we continue down, we look at the actual home sales with 7,481, which was up from last year, but down again from May. So in May, we had over 9,000 sales. So we have a decreasing trend, more so than just the seasonal low, okay? Because a lot of that was people like, hey, I don't want to pay these higher interest rates. And the prices haven't adjusted to reflect that the higher interest rate has come up. So what's happening is people are just saying, well, we're going to sit on the sidelines and we're not going to purchase anything. So if all you're doing is looking at the June number snapshot, which most news reporters do, unfortunately, news channels, they just take a snapshot and say, hey, the market's up from last year. Well, yeah, in theory, it is from last year, but from last month, we're actually trending back downwards. So what reflects that is a number of things. One is the home sales. That's the actual sales that have occurred, 7,481, which is still a tremendous amount of sales. If you look at our counterparts in like New York or like bigger cities like LA or Miami, this is still a tremendous amount of sales, but their prices are significantly higher. But if you look at our counterparts in Canada, like in Ottawa or Calgary or Vancouver has basically the same price point, but significantly lower sales. So there's less buyers in those marketplaces. So we still are a healthy market, but we're in a buyer's market. And how do I know that? Well, I'm not some sage here. I just look at the numbers, and the numbers are reflective of a buyer's market. How I know that is what we call the sales to new listings ratio. See if I can make that bigger here. And about the same. Yeah. So, anyways, the number at the bottom here, sales to new listings ratio. What that means is the number of listings that came on the market of actually sold was at 47%. So again, if you follow me, you understand that any number below 50% of sales to new listings ratio is a buyer's market. Anything over and above about 52, 53, you're into a seller's market. Now, we've been seeing those trend numbers in a seller's market in the 70s and 80s for the last decade. But it's only been the last 2 years we've had these like 50% or lower. And if you look at last month's number of sales to new listings, it was at 59%. So what does that tell you? Is a seller's market. What is that reflective of? Higher prices, more competing offers, buyers are willing to overpay for properties. That is when you want to sell your property. But if you look at the June numbers, you're down to 47%. It's a significant drop. So the listings that came on in May were about the same, just over 15,000. We have almost 16,000 in June, but there's less buyers because there's more factors that are affecting the marketplace. It's not just, hey, I just want to buy a home in Toronto. No, there's a lot of inventory not moving. So what that reflects is it's a buyer's market. So what does that mean? You're going to get a lower price point. You have more inventory to choose from. Sellers generally are in hot sellers markets. There's no contingencies, meaning the buyers just have to come with a firm offer, which is never a good thing. So if you're in a buyer's market, which we are in June and even to July, the sort of the early numbers coming in for July, it's the same thing. Actually, they're worse than June. I anticipate much lower numbers in July and August, but mostly because of the seasonality. I really hope the government of Canada keeps their interest rates at where they are. If they continue to go up, we're going to have another video, another topic and discussion about that, because at this point, the increasing interest rates are not actually affecting the inflation rate, which is kind of what the drive was behind all of this. And those numbers have come out, and the statistics are saying, look, this is not helping driving down inflation. So there's no point of increasing it further. So if they're increasing it further, they have a secondary agenda, which they're not telling anybody. Anyways, that's a side note. It's a different video for a different day. But those are the numbers for June. So our average price in Toronto is 1.182. As a recap, there was 7,481 sales. And we're into a buyer's market because of the 15,865 listings that came onto market, only 7,481 sold. So I say only, but that's still a big, significant number. We don't talk about pre-construction or new construction because the reporting numbers on those are a little iffy on a lot of these projects. So we only want like specific numbers that we can, relay to our listeners. But at the end of the day, the pre-construction market is still pretty good, surprisingly, because those prices have been skyrocketing this year. Some projects have sold out, surprisingly, but that is just a reflection of people are willing to still buy real estate. They just don't want it today. They want it 3 years from now, 4 years from now, 5 years from now when these projects are ready, knowing that the market's still going to continue trending upwards, even though we have these small blips in the market right now. The actual trend is still significantly upward, and there's still a supply issue. There's still huge demand. Last year numbers just came out for Ontario's population growth was 509,000 new people, which is a staggering number because there's only 20,000 new homes built last year. I think there's 72,000 new homes built last year in Ontario. So there's a significant gap in the housing market, and that is going to catch up to and will surpass most people's expectations over the next 4 and 5 years in terms of affordability and price point. So yes, these numbers are great for buyers right now. Last month was a better month if you're a seller. So if you're still a seller or will need to sell, I would, if you can, wait until the fall market, September, October. I anticipate more stability in the marketplace, and I anticipate that the buyers will be coming back from summer breaks. Agents will be coming off their summer breaks. Kids will be back in school. More people can focus on the homes that they want, the areas they want. They can make those moves. So the fall market is going to be better to sell. But if you're a buyer like me, and I buy a lot of real estate, this is the time you get deals. This is the time you get amazing opportunities. I picked up 4 properties last month. One of the properties we just closed on quickly. The other 3 are longer closings because I'm trying to get a lower interest rate. So I anticipate they're going to either maintain themselves or decline by the end of the year. But the great property we purchased was they're originally asking 1.5. They dropped to 1.4, 1.3, and we ultimately got for 1.165. So there's incredible deals in the marketplace if you know what to look for. And if you need our help, just click on the links below. Now, another fun thing that we do is we look at 4 properties each month, the lowest sold property, the highest sold property, and then who paid the most for some property and who got the best deal in the market every single month. So this is the lowest priced property that sold last month in June in Toronto. Sold for 415,000, which was 119% over what they were asking for, which was 349. And it's actually a great deal. Whoever bought this property, congratulations. It was fully renovated. This is a great rental property. It looks to be like whoever purchased it, or whoever sold it, sorry, purchased it. I looked at some of the history. They purchased it, they renovated it, and then they sold it. They didn't make much money on it, but they did a decent job on the renovation for the location, for the building. But whoever bought it did very well on it. For 415, you're getting a bachelor apartment, which they typically go for 600,000, so it's significant below that. But you'll rent this out for anywhere from $1,900 to $2,100 per month, so it's a fantastic deal. The highest price, that's the highest differential price. So we'll get into that. The highest price property was a custom build on Russell Hill that sold for $16.2 million. The original asking price was $17.5 million. I can't show you any pictures because they're still constructing the house. Can you imagine that? So it was purchased not sight unseen, but they probably saw the structure, but they don't know what it's going to look like finished. I'm sure there was a big negotiation of like how it's going to be finished and all that, but I can't show you that. I will show you potentially when it's finished. We would maybe do a house tour of it. But it was 16.2 million. It was the highest price sold. This is the best value that sold in June. So the person got the price for 89% or 89 cents on the dollar. They're asking almost $5 million. It sold for $4 million. So they got a $500,000 reduction on it. It's a massive house. It's going to require significant updating potentially, but a lot of people like this sort of this old style, and it's got a lot of character to the house. It's multiple units, I believe. I think it's a triplex, but it's whatever it was sold for at $4 million. It's a massive property. So I think I wouldn't be a buyer of this personally, but whoever purchased it, they got a fantastic deal on it. And the person who got the worst price on a property, this was something on Ossington Avenue. They're originally asking $999. They paid $1.505 million for it. They paid 50% over the value of they were asking. So the highest percentage differential was 151%, which is ludicrous. Considering I just showed you a few properties that are selling, a lot of properties selling below asking actually. So the fact that someone was eager enough to get into this property for $500,000 over the asking price, I just think they got caught up emotionally. I don't know what they were thinking. This is not reflective of what you should be buying in this buyer's market. My goodness, because this needs a lot of work. It's decent, but it still needs a lot of work, as you can see from the pictures. So they probably purchased it for a rental property. They might convert this into 2 or 3 units, which I hope so, because otherwise the price point they paid for, if they're just there to live in it, that's not ideal. So anyways, that is June's market report for Toronto. If you need more help with your real estate and some real estate advice, just click on the links below. You can get me on the phone or just get a hold of a team member of ours, and we'll be happy to help you out. All the best.